collaboration with our friends at the Fredericton Chamber of Commerce and the St. John Region Chamber, are pleased to partner on today's presentation. As most of you on today's call will know, the Bank of Canada set its last benchmark interest rate of 2020 yesterday, keeping the key rate at 0.25%. This is certainly good news for the business community as it relates to borrowing costs as we work together to emerge from the economic impact of COVID-19. Today, Deputy Governor Beaudry will speak on the topic entitled, "Our Quantitative Easing Operations, Looking Under the Hood." The bank has been consistent in policy to keep inflation within the 2% target, and we all look forward to hearing from him as he explains the delicate balancing act of interest rates and controlling inflation amid a global pandemic. La présentation d'aujourd'hui sera suivie d'une séance de questions et réponses, durant lesquelles vous pourrez poser vos questions. Posez vos questions en utilisant les sections à la droite de votre écran. Today's presentation will be followed by a Q&A session, and we encourage you to submit your questions at any time by using the Q&A box on the right side of your webcast screen. We will pose as many questions as time allows. So here is how today's presentation will unfold. After my introduction, Mr. Beaudry will speak. Following his presentation, my colleague, Krista Ross, the CEO of the Fredericton Chamber, will moderate our Q&A, which will be followed by closing remarks and thanks from David Duplessis, CEO of the St. John Region Chamber. Just so you can appreciate a little more about the breadth and depth of Deputy Governor Beaudry's experience, he became Deputy Governor of the Bank of Canada in 2019. In this role, he oversees the bank's financial system analysis and shares responsibility for setting monetary policy. Avant de se joindre à la banque, M. Beaudry a enseigné pendant 25 ans à la Université of British Columbia, où ses recherches ont porté sur le changement technique et les croissances, l'économie de marché de travail, la politique monétaire et la stabilité du système financier. He has also held academic positions at Oxford University, Boston University, and Université de Montréal, and was a visiting professor at the Massachusetts Institute of Technology, Panthéon-Sorbonne University, and the Université de Toulouse. Mr. Beaudry held a Canada Research Chair in Economics from 2000 to 2015, and is a two-time recipient of the Bank of Canada's Research Fellowship Award. Born in Montreal, Quebec, Mr. Beaudry holds a BA in Economics from Laval University, an MA in Economics from the University of British Columbia, and a PhD in Economics from Princeton. Deputy Governor Beaudry, welcome, bienvenue. The virtual floor is now yours.
Even if we have to do virtually, as we're getting used to, and in this case, actually from opposite coasts. So I'm currently a resident of Vancouver, but I hold fond memories of time spent vacationing in the Maritimes, and especially in beautiful New Brunswick, from my hometown of Quebec City. Comme vous le savez, la Banque a annoncé hier sa décision de maintenir le taux cible du financement un jour à 0,25%. Et j'y reviendrai un peu plus tard. Tout d'abord, j'aimerais vous parler de certaines des mesures que nous avons prises en réaction à la COVID-19 et des défis extraordinaires que la pandémie présente pour le bien-être financier des Canadiens. Since the pandemic hit in March, we have taken swift and decisive decisions to help Canadian households and businesses bridge this crisis. We are also concerned with providing a strong foundation for long-term recovery. In the face of the pandemic, we lowered our policy rate to 0.25% to ensure lower borrowing costs for households and businesses. We have committed to maintaining that low policy rate at this level until our inflation objective is achieved. We have also launched nearly a dozen liquidity facilities and asset purchase programs to keep markets functioning and credit flowing, as well as to allow interest rate cuts to work their way through the economy. Today I'll discuss our main large-scale asset purchase program in greater detail. I'm here referring to our Government of Canada Bond Purchase Program. We commonly refer to this program as quantitative easing, or QE. Il est important de savoir que ce programme et les autres programmes de la Banque sont fondés sur le même cadre de conduite de notre politique monétaire qui a fait ses preuves depuis des années au Canada. Toutes les mesures prises par la Banque visent à aider l'économie à revenir à sa pleine capacité et ainsi favoriser l'atteinte de la cible d'inflation de 2%. With this in mind, I would like to clarify some of the mechanics of our quantitative easing, or QE program. I'd also like to clear up potential misconceptions about QE. When we conduct QE, the bank purchases bonds on the secondary market that were previously issued by the Government of Canada. This program expanded our balance sheet, and this has generated considerable attention and some concerns. The most common questions we get are, how do we actually buy these assets? How do we pay for them? Are we financing the federal government's debt? And are we in danger of igniting high inflation through this process? So let's take some time to talk about QE, what it does, what it doesn't do, and how it works, because monetary policy works best when it's well understood. As I just mentioned, the bank's primary monetary goal is to achieve our 2% target on a sustainable basis. To do that, we strive to keep the economy producing as close as possible to capacity. This is particularly important in times like these when inflation is well below target and unemployment is very high. Our policy interest rate is the overnight rate. This is our main policy tool in normal times. The overnight rate has a direct impact on the cost of borrowing over short terms. Les baisses et les hausses du taux directeur influent également sur les attentes du marché quant au futur niveau du taux de financement à un jour. Et ces attentes agissent à leur tour sur les taux des emprunts à plus long terme. C'est par cette voie que la banque influe sur le coût du crédit des ménages et des entreprises. Ceci se répercute alors sur les décisions de dépenses et d'investissement et au final sur l'inflation et l'emploi. But the overnight rate isn't the only way we can affect the longer-term interest rates that matter to Canadians. When we can no longer reduce our policy rate, we need to dig deeper into our toolkit if we want to further stimulate the economy. One important instrument in our extended toolkit is QE. So let me begin by explaining how QE affects interest rates. When the bank buys government bonds, it bids up the price, so the price goes up. This in turn reduces the interest rate or the return that that bond pays its holders. When interest rates on government bonds are lower, this transmits itself to other interest rates in the market, such as those on mortgages and corporate loans. This stimulates more borrowing and spending, which helps move inflation closer to our 2% target. So as you can see, even when the overnight rate can no longer be reduced, the bank can still affect longer-term interest rates by using QE. Let's turn our attention now to the mechanics of QE. Every week, the Government of Canada sells bonds to financial institutions. These are mainly commercial banks. Under QE, the bank buys bonds from these market participants, not directly from the government. The bank conducts QE operations through a reverse auction. When you think of an auction, you probably imagine someone selling goods with people bidding to purchase them. When we conduct QE, we call it a reverse auction because it's the opposite we are doing. We hold an auction to buy, not sell government bonds. Nous procédons de la façon suivante. Nous annonçons notre intention d'acheter une certaine quantité d'obligations. Nous recevons ensuite des offres de la part des institutions financières qui souhaitent nous vendre une partie de leurs obligations. La mise aux enchères est concurrentielle et les offres dépassent presque toujours la demande, ce qui est une bonne chose puisque ça nous permet d'acheter des obligations au plus bas prix. We are currently buying a minimum of $4 billion a week of bonds through this process. Overall, we have purchased slightly more than $180 billion worth of bonds since the program was first launched in March. That's certainly a big number. And it's true that our QE program and other asset purchases led to a substantial increase in the bank's balance sheet. But despite all these purchases we made, it is worth noting that relative to the size of the Canadian economy, the value of assets we hold is relatively low by international standards, only about 2/3 of that of the Bank of England or the US Federal Reserve. And you should be able to see that on the chart. Of course, when we buy these bonds through our auctions, we need to pay for them. But we don't print new banknotes to do so. Rather, we pay for them by issuing a particular form of liability. For anyone who knows the basics of accounting, you know, well, our balance sheet has to balance. The bonds we purchase become an asset for us, so we need a liability on the other side to pay for them. Here's an example. If we buy $100 million of government bonds from Bank A, we pay for them by issuing what are called settlement balances. These appear as deposits with the Bank of Canada. Just like commercial banks consider deposits as a liability that they owe their clients, settlement balances are a liability the Bank of Canada owes to the commercial banks. We pay interest on settlement balance at our deposit rate, which moves one for one with our policy interest rate. En résumé, nos opérations d'assouplissement quantitatif consistent à acheter des obligations du gouvernement auprès d'institutions financières et à émettre une créance sous la forme de soldes de règlement pour les payer. Il faut savoir que les soldes de règlement font partie intégrante des opérations des banques centrales. Cette capacité de créer des soldes de règlement, seules les banques centrales la possèdent. Et nous exploitons cette capacité avec prudence pour remplir notre mandat qui est de favoriser la prospérité économique et financière des Canadiens. I'll be the first to admit that the mechanics of quantitative easing can be hard to wrap your head around. So I'd like to turn my attention now to the questions I've raised earlier, what the public and some officials have asked us to explain about QE. The first is the impression that we're activating the printing press and issuing banknotes to buy government bonds. Like a lot of central banks, the Bank of Canada moved away many years ago from setting the amount of cash in the economy. Instead, we set the overnight rate and let households and businesses decide how much cash they need to conduct their transactions. When we conduct QE, as I've explained, we buy government bonds and pay for them by issuing a variable interest rate liability in the form of settlement balances. Just like anyone else who takes on debt, we compensate the holders of settlement balances by paying interest on these balances. And as our policy rate changes, so does the interest rate we pay on settlement balances. When we carry out QE, our balance sheet expands because both our assets and liabilities are increasing, but the quantity of banknotes in circulation does not. An important point is that QE does not release the government of its liabilities. We are not financing government spending at no cost, nor are we making the government's debt disappear. There's a big difference between financing the government and influencing the cost of government financing. Through QE, we're doing the latter. We are lowering the cost of borrowing for the government, but much more importantly, we're lowering the cost of borrowing for everyone in Canada. This is households and businesses. To put it simply, we're not providing a free lunch for the government through QE. The government will have to repay the bonds that we purchased through our QE program when they reach maturity. I should note that QE operations may result in a profit or loss for the bank because of the difference in interest rates between our borrowing costs and the returns on government bonds. Any profits or loss arising from our QE operations is passed on to the government as part of our regular remittance. Mais il faut savoir que notre objectif principal n'est pas d'utiliser ces opérations pour engendrer des revenus. L'assouplissement quantitatif nous sert uniquement à réduire le coût d'emprunt pour tout le monde au Canada. De cette façon, nous facilitons le retour de l'emploi et atteindrons notre cible d'inflation. So let's move on to my third and final point of clarification. Since we started QE, I've heard and read a lot about the risk of causing excessive inflation. It is true that our QE program is actually designed to increase our current low level of inflation. That's the whole point, to get us back to full employment and full capacity use and hit our 2% inflation target. But rest assured, we will not overuse QE and overshoot our 1 to 3% target range for inflation. The exit strategy for QE is tied in our inflation goals. We will pursue quantitative easing until our economic recovery is well underway. At that point, we will have at least three options. Once the amount of purchases we've been doing has been reduced, The first option would be to stabilize the level of assets on our balance sheet by reinvesting any proceeds from maturing assets into new ones. This would maintain but stop increasing the level of monetary stimulus. The second option would be allowing maturing assets to roll off the balance sheet and not to reinvest the proceeds. The third option would be to actively sell the assets, thus quickly reducing our balance sheet. This third option would be the most aggressive for reducing the level of monetary stimulus. Several central banks that use QE during and after the global financial crisis focused on the first two options in a careful sequence. Our choice between the different options would depend on our outlook for the evolution of inflation at that point in time. The good news is that our efforts in face of COVID-19 have had their intended effects. Financial markets are functioning much better than they were when we began our policy actions in March. Our balance sheet has been stable since July, largely due to reduced use of certain programs, as again you should be able to see from the chart. Nous avons aussi récemment rééquilibré nos achats d'obligations. Nous avons modifié notre programme d'assouplissement quantitatif pour en concentrer l'impact sur les taux d'intérêt de plus long terme qui importent aux Canadiens. Nous achetons moins d'obligations à court terme et plus d'obligations à long terme, c'est-à-dire dans les segments où les bénéfices pour les ménages et les entreprises sont plus grands. Par exemple, en achetant davantage d'obligations à 5 ans, nous faisons baisser les taux hypothécaires à 5 ans. Since this recalibration will increase the impact of each dollar spent in our QE program, we recently reduced our minimum weekly purchases from $5 billion to $4 billion. All of this allows us to be more efficient with our balance sheet while continuing to provide at least as much monetary stimulus. Let me conclude by spending a few minutes to provide some context for and insight to our policy decision yesterday. As was said, we decided to maintain our level of the policy interest rate at 25 basis points and continue asset purchases at a minimum of $4 billion per week in our QE program. Foremost on our mind heading into the decision were recent developments across a few dimensions. How things have transpired to date, how things look in the near term, and how things are shaping up further out. Let me briefly discuss each in turn. Looking back on developments to date, last week's publication of Canada's national accounts for the third quarter of 2020 confirmed our expectation that a strong rebound would take place as the economy reopened, following the sharp decline in activity in the second quarter. Indeed, the economy grew at close to 9% in the third quarter, just a bit below the 10% growth we had expected, as explained in our October monetary policy report. The overall level of economic activity remains largely on track with our expectations, reflecting some historical revisions to gross domestic product and a little bit more momentum heading into the fourth quarter than we had anticipated. It's also worth noting that stronger global demand is currently pushing up prices for most of our commodities, including oil. Nous pensions également que ce fort rebond ferait place à une phase plus longue et plus lente de la reprise économique que nous avons appelée la phase de récupération. En effet, les données plus récentes portent à croire que cette récupération se déroule aussi comme nous l'avons prévu. The rising incidence of COVID-19 cases across the country and the tightening restrictions on activity in response are exacerbating this dynamic. The second wave of COVID-19 is clearly underway here in Canada and globally. This will weigh on economic activity in the first quarter of 2021 and represents an important downside risk further out if the situation becomes much worse. As we noted in yesterday's decision, the federal government's recently announced measures should help maintain household and business incomes during this second wave and thereby support the recovery. Looking further out, the picture at least is a bit more reassuring. Recent positive news on vaccines represent an upside risk to the outlook, although uncertainty remains around how well it will actually be rolled out in Canada and around the world. So that sets the scene. Going forward, both downside risk due to the increased cases of COVID-19 and upside risk due to the new vaccines. For the bank, that means being prepared to respond in either direction. Thankfully, we have the tools to do so. Should things take a more persistent turn for the worse, we have a range of options at our disposal to provide additional monetary stimulus. This could include increasing the stimulus power of our QE program, or it could involve targeting specific points on the yield curve, otherwise known as yield curve control. It could also include reassessing the effective lower bound, which would allow for the possibility of a lower but still positive policy rate. In theory, negative interest rates remain in the bank's toolkit, but we have tried to be very clear that barring a dramatic different set of circumstances, we don't think negative rates would be productive in the Canadian context. Quelles seraient nos options si les risques à la hausse se concrétisent? Plus la vaccination se fera rapidement, plus vite les travailleurs des secteurs à forte proximité physique pourront retourner au travail et plus rapide sera la reprise. Un tel dénouement serait une excellente nouvelle. Dans un tel contexte, il faudra peut-être réévaluer le degré de détente monétaire nécessaire pour atteindre notre cible d'inflation. Un peu plus tôt, j'ai expliqué de quelle façon nous pourrions réduire la détente offerte dans le cadre de notre programme d'assouplissement quantitatif. What we do know today is that Canada's economic recovery will continue to require extraordinary monetary policy support. We have been clear that we will hold our policy rate at its effective lower bound until economic slack is absorbed, so that our 2% inflation target is sustainably achieved. According to our October monetary policy report, that doesn't happen until 2023. We have not yet done a full analysis of all the new information to shift that assessment. To reinforce our commitment and keep interest rates low across the yield curve, the bank will continue our QE program until the recovery is well underway, and we will adjust it as required to help bring inflation back to target on a sustainable basis. Whatever the outcome, the bank remains committed to providing the monetary stimulus needed to support the recovery and achieve our inflation objective. I'd like to thank you very much for taking time today to listen, and I look forward to answering any questions you may have for me. So I'll return the virtual floor to, I guess, David. Is that right? Or do I send it back to John?
Yeah. No, it's going over to John and Krista, but I believe Krista was having some technical difficulties. So I'm not sure if it's going to Krista or John.
Krista's here, and I believe it is going to me. Thanks very much. And thanks very much, Deputy Governor Beaudry. We really appreciate your comments today. I know that you'll be thanked at the end by David, but it's my duty and my pleasure to share questions with you that are shared with us from our guests today. So the first one I'd like to ask you is, do you see any tangible bump to Atlantic Canada's economy over the next 2 to 3 years due to the relatively low number of COVID-19 cases here throughout the pandemic? And are those potential benefits being mitigated by the more restrictive public health measures that are imposed here?
Certainly a good thing for the Atlantic Canada that's had less COVID cases. That's clearly a good aspect, and it's allowed a lot more things to kind of keep open. Now things are a little bit tighter at the moment, and there's a real balance, and that is really for the local authorities to decide. What we do at the Bank of Canada is we try to take what the different authorities are deciding and figure out what monetary policy is good for Canada as a whole. It's true that our monetary policy can't be directed at particular regions, but I do think overall the situation in Atlantic Canada has been quite good, and that's been very much to the benefit of the region.
Yes, we're certainly pleased with how things have happened here, although it's a challenging situation from coast to coast. The next question that's been submitted is, what triggers will the Bank of Canada watch that could lead to rate increases?
Really what's important for us is we really want to get everyone back to working, back to normal. So what we're looking for is that aspect, is really kind of getting what we call the economy back to full capacity. So we'll be trying to monitor that. Obviously, things like the unemployment rate, the opening of businesses, all those are different measures, and we kind of keep track of all those things to try to figure out if we are back to capacity. We obviously keep an eye on inflation. That is an indication of when we are back to capacity. That tends to have inflation increase, and we want to see that in a sustainable basis. So we really want to make sure that after this pandemic, we allow the economy to try to get back fully. And right now, we don't see that happening until about 2023.
It sounds like you're watching for the same things that we as Chambers of Commerce are watching for sure. Economic recovery, employment, and all those things. So the next question that's come in is, how long beyond the pandemic do you see uneven sectoral, gender, and geographical effects continuing?
Well, I think on all those effects, first of all, they're very important. Okay, so there's really a lot of differences between different groups and different regions, and those will kind of continue for a while. So in particular, we really know that there's certain sectors that have been really hit very, very hard. Obviously, restaurants, tourism, all those have been hit extremely hard, and it might take a while for those things to get back. It'll depend on how people's preferences, how quickly people will get confidence to kind of go back to restaurants, go back to traveling. Those are parts that we can see that can last. And the areas that depend a lot on those type of sectors are likely to have difficulties that will be prolonged. But that's exactly what we're hoping is help all those sectors get back, and we get back to a more normal set of activities. It's also true that across Canada, there's certain regions that are more affected. Overall, for example, all the oil and gas producing regions are also affected. The price has fallen quite a bit. It's been increasing a bit more recently. It's kind of coming back, but it's still quite a bit below where it started. So those are also regions that kind of can have other difficulties, which are different from the ones directly associated with proximity type clientele relationships. And as you were mentioning, those sectors in particular, when we look at tourism and restaurant, there's a lot of employees in those sectors that tend to be on the lower side of the income distribution. So that makes a lot of the problems we have in terms of income distribution possibly come back to surface. And so that's something also that we keep an eye on. And that's also, there's a gender aspect to that. There's a lot of aspects. And yes, they'll likely continue, but hopefully we can get that whole economy back and working, and hopefully we can get all those sectors back on foot.
We're definitely seeing that uneven pandemic effect here in the Atlantic region as well, with the restaurant, tourism, hospitality industries, transportation, and so on. The next question that's come in is, Canada is a trading nation, and the USA is our largest trading partner. To the degree that you're able to comment, what is the near, medium, and long-term forecast for the Canadian dollar in comparison to USD?
Okay. So first of all, let me make it clear that we do not at the Bank of Canada target the Canadian dollar versus the US dollar, but it's something that we follow very closely. We don't go out and try to make predictions about it. We kind of take it where it is, and we kind of use it within our models to figure out how it's going to affect the growth for Canada. So we keep a very big eye on it. And to the extent, depending what's affecting the Canadian dollar, that affects the way we look at the outlook and affects our monetary policy. But I won't go out and kind of predict where the Canadian dollar will go here.
No special predictions just for today's audience?
No special predictions for today's audience.
Our next question, how important is immigration to Canada's recovery, and particularly here in Atlantic Canada?
Okay. Immigration has played a big role in the growth in Canada in particular over a long time, but especially in the more recent years. It's been quite important to kind of have that growth, and we have immigration coming in from a lot of different countries with a whole variety of different people, and it's been very, very important. And all regions, and I remember looking recently at even in New Brunswick, for example, a lot of the growth has come from having immigration increase in the recent past. Now, as things slow down, that makes things a bit more difficult. We're having that part. At the same time, there's a bit of adjustment. We're trying to kind of get the economy back. We think that as we look forward and things pick up, the immigration will also pick up. Obviously, right now, a lot of things have been closed. One of the parts that's been reduced, and I'm guessing it's affected in part Atlantic Canada, is even immigration at the level of students that come into universities, for example, that a large part of that sometimes, they stay, and that's part of our immigration process. And now with the universities kind of everyone being online, a lot of people have not come in. So that's one aspect that might come back. But yes, it's a very important part in our overall growth and how we'll adjust in the future. But I'm confident that that will pick up back within a year or so.
We're hopeful in that regard for sure. We definitely see with our aging population here that it's an important factor for us. The next question that's come in is, how does the impact of the pandemic on Canada's economy compare to the impact it's had on the U.S. economy? Are we better off? Are we worse off? Or is it comparable?
Well, at first pass, okay, so if you took a really big picture, it's relatively comparable. I mean, we had, everyone, and this is true of, a lot of the rich economies, really had this second quarter was really this very sharp downfall. It was huge everywhere. And then this important rebound, and then this part that we're now in after the very quick rebound when we reopen things, we're in this more choppy mode, and that's a bit the same thing right now in the U.S. Now, hopefully, we're doing, I believe, a bit better job, both in protecting people as with respect to COVID. So we've had better measures and we have less of the COVID cases expanding, and that's kind of helping on that side. We've also had very strong support to actually help and target, income to those that needed it. The U.S. has done part of it also, but we've done a quite good job, at least as you were mentioning before, this very unequal aspect of this pandemic. At least the support programs were directed for helping a lot of the people that were most directly affected. So on balance, it's not too far. The U.S. has had the rebounds have been a bit quicker than that in Canada. But now, when we look right now, and the most recent data is really coming back in the U.S. and having a bit more of this choppy part.
The next question that I have for you is, you mentioned in your comments today, the mechanics of quantitative easing can be really hard to wrap your mind around. What's the most important aspect that Canadians should try to understand?
Very good question. So really thinking, simply, there's a lot of things that get said about quantitative easing. Really what you must think is that it is an operation what we're doing is to lower those rates further out in time. So the rates at 5 years, at 10 years, rates at which, people borrow, businesses borrow. We're trying to reduce those rates. We're not doing it in a way that is financing the government. We're doing it by printing money. We're doing it by doing a more subtle type of financial intervention. And really what's important is really that aspect of knowing what we're doing is lowering those rates to try to get borrowing, and we're not doing the other aspects that I just said.
The next question that's come in says, how could the second wave affect the level of scouring that the bank has seen in the economy?
That's actually a really good question, because one of the things we're the most worried about is exactly this aspect of the second wave creating more scarring. The typical example here would be thinking about like a whole set of small businesses that might have made their way until now. Okay, so you figure out a way of making things work, you keep things open, but if things aren't great, you're trying to work out, and now the second wave arrives. At some point, you just say, "I'm throwing in the towel. It's just not worth it. I can't manage." That's scarring, because then that business is closed. That becomes harder to get things going. When I'm saying we want to have that recuperation phase and really bringing into a full recovery, we don't want to have all these businesses that are closed and gone out of business. And that's the type of scarring that a second wave might hit a whole set. Because, the reality here is up to now, although a lot of businesses are struggling and are having difficulty, the surprising thing is we haven't had too many bankruptcies and too many insolvencies. And in that sense, it's been pulling away. But that doesn't mean the problem's not just on an edge. It might be a whole set of those businesses are just on the edge of falling over. And that's what a second wave could do. So when we're looking at this balance right now between our short-term risk and our longer-term better aspects with the vaccine, it's exactly what scares us is this new COVID wave could be really creating some of that scarring, which will need extra push to help the economy get back.
Definitely, our chamber members tell us that sort of not knowing when the end is in sight is the challenge. If they could prepare for a certain date or a certain time and they knew when the end would happen and when things would kind of get back to normal, it would be easier to predict and to hang on, you know.
Well,
I guess that
the vaccine gives a little bit of information on that side. Hopefully it's giving a little bit of a light at the end of the tunnel, and that's that's the upside part that we want to keep really in our sight.
It's definitely giving hope. And that leads to the next question that has come in, which is, what is your view on small business recovery post-pandemic? And what do you worry about for the small business sector?
Well, again, it really is this part that we're hoping that, with all these different measures that we're putting in, that small business can kind of get through this. Obviously, we're trying to help as much as we can to keep borrowing costs really low for small business, giving them assurance that this will stay for quite a while too. Like when we say, this should happen, we shouldn't be increasing these rates at least until 2023. That's giving a bit of assurance there. We want to get those small businesses in and kind of helping back. My impression is if they can hold on, the recovery will be there. I do think this vaccine these vaccines will be doing their job, but we still have a good 6 months or more to kind of get through before it's really kind of working way out. We don't know exactly yet, so we're still trying to figure that out. But I'm really hopeful, and we're trying to give as much help as we can.
The next question is talking about the housing market, and I'm going to throw in a stat that I heard yesterday. I don't know if it's 100% accurate. A realtor in Fredericton told me yesterday that in a cold market, there are about 3,500 houses on the market in our region. In a hot market, there's about 1,500, and currently there's about 500. So that tells us what's happening with the housing market. The question is, considering the current environment of low interest rates, what is your projection for the housing market? What kinds of policies could be put in place to avoid a housing bubble?
Okay, so that's very important. Again, here, this is one aspect. So one of my responsibilities at the bank is especially aspects associated with financial stability. So looking at the housing markets and making sure we're not creating a bubble is very important here. And so we're keeping an eye on that. Obviously, our measures, well, there's two parts of kind of the hot housing market that we've had recently. There's one part that was pent-up demand. We had like a spring that, usually that's when the housing market really works. This year, it was completely closed off, so we had it later in the year, and so that's part of the pent-up demand. Our lower interest rates were to encourage, and that's the part to encourage the aspect of having more demand there, and that's what we're seeing. We want partly that construction sector to get back in different parts. But at the same time, we don't want to create that type of bubble. And the things that we follow, and up to now, it doesn't seem to be creating that bubble. So one of the things that you keep in mind, so you really have an aspect of a bubble when people are saying, I'm buying because I'm thinking the price is going to continue increasing next year. And it's going to continue, like I'll get 10%, 20%, and just going to build up. So we're following very much. So we have these surveys of expectations of people, and we're trying to figure out, are they buying based on these kind of unsustainable expectations of how house prices are going to move? And up to now, that's not seeming to be why they're buying houses. It really is this combination of pent-up demand and the lower rates that are allowing different people to get into the housing market and buy houses. So it's a very important question. We do want to stimulate. That's part of the economy, housing. We want it to stimulate and kind of get it going. It's going, but we're keeping an eye on not creating that bubble. There's also a different aspect, and this might be affecting, particular places like New Brunswick, is what we see, like for many years coming into here, we heard a lot about markets like Toronto and Vancouver being very hot. And those are some of the markets that we're very worried if they kind of kept on going a lot more. This is one where it's much more broad-based. There's actually, in the housing market, a lot of aspects are in another set of cities as opposed to just Toronto and Vancouver that are having this. So it's kind of more spread across. And it's a bit of a catch-up as reflecting these kind of lower interest rates. So very good question, and we're keeping an eye on it. And we don't think it's kind of creating a bubble at this point.
Are you worried about the rise in prices across the markets or in any of the markets?
I'm worried about obviously, if you're going to stimulate a market like the housing market by reducing interest rates, you're going to see some response in prices, and that's what we see. Now, the overall affordability is better with these lower interest rates, and so that's why we're seeing people purchase. So when people say, well, can't no one purchase? The reason it's kind of going up is a lot of people are managing to purchase at this point. And so that's exactly what we want. We want more activity, get it in. But the difficulty is, and I completely understand it, is really down payments for young people. That's the difficulty of getting into the market. Because at these low interest rates, if you can get in, it's not that costly to kind of carry the cost of a house in terms of the interest rate cost. What's hard is actually getting in and making sure you have that down payment. And that's certainly a difficulty, and it has to be kept in mind.
So how do you plan to wind down the quantitative easing program?
Okay, first of all, and I kind of tried to give a few indications, and I'll kind of repeat a few things I already said, but that's not, it comes in a speech, and so it's always a bit hard to catch. So first of all, there's many steps in our winding down of the QE program. So right now we're buying this aspect of $4 billion a week of bonds. So the first step would be to stop buying that $4 billion. So that would kind of stop adding more bonds into our portfolio. So that we're saying we will kind of do that. We'll kind of start thinking about that when we're really confident that the economy is well on its way. Once we stop the purchase of new bonds, then we have different strategies. So then the aspect is, one, we could decide, okay, we'll keep whatever we have as a steady state for a while, if that's what the economy needs. And any bonds that are maturing would reinvest the proceeds and buy new ones, and keeping our balance sheet at the same level. That would stop having as much monetary stimulus as we're doing now, but wouldn't kind of extract a lot of stimulus at the same point. It kind of keeps the stimulus constant at that point. The other thing would be to say, okay, this is the intermediate, is we want to bring our balance sheet back to normal a bit quicker, and the ones that would kind of roll off, so the ones maturing, we wouldn't replace them. And then slowly our balance sheet would reduce as the ones that are kind of like, we'd first the 1 year kind of bonds, the 2 year bonds, all those would kind of slowly roll off, and our balance sheet could move back. Again, that would be an intermediate. If the economy was picking up a bit faster, maybe that's the way we do things. And then the third is to be much more aggressive, is once we kind of reduce our purchases, is actually to start selling some of the bonds that we'd have. And so those are all the options we have. And right now, we can't say which one we're going to do and exactly in what order, because we want to wait and see how the economy, and again, we're really committed to having this recovery work well for Canadians and really kind of bring the economy back. So the last thing we want to do is pull off too much stimulus too quickly to stop this recovery. So we want to wait and see. But at the same time, if things really get back really quickly, we have options to extract more of it or less, and we'll use those as relevant as it goes forward.
Dr. Beaudry, I have one last question, and it would be nice if you could give us a hint on who will be the next Canadian honored on our currency for the upcoming $5 banknote.
I'd like to know. This is even one I don't know at this point, okay? So there's a subgroup there, and there's the names have been put out, and if you've looked at the different names, there are different people that it might be. All of those are great Canadians, and any one of those would be a real honor to have on our banknote. And so, but I don't have any insight to give you there.
I thought today we might get in on the secret.
I'd like to have the secret too at this point.
All right. Well, I very much appreciate your answers to these questions, and I know our guests were very thankful for your presentation today. And at this time, I'm going to hand it over to my colleague, David Duplessis, CEO of the Chamber St. John region, and he's going to more formally thank you. So thanks very much.
Thank you, Krista.
Well, thanks very much, Krista. It's my pleasure to be the person to close and to say thank you to everyone. That's always the fun part of it. First of all, thank you, Mr. Beaudry, on behalf of our chambers and our business community for taking the time to speak to us today. It was very, very informative, and we really very much appreciate your insights as well. Thank you to all of our sponsors from Moncton, Fredericton, and St. John. We have the Banque du Canada, Deloitte, RBC, Royal Bank, Stuart McKelvey, Emera, New Brunswick, UNB, and economic development of our regions as well. So thank you to all of those sponsors. And finally, my absolute pleasure again. Thank you, Kristen. Thank you, John. My colleagues in Moncton and in Fredericton, it's such a pleasure. We work together quite closely all of the time. And it's, again, always a pleasure to see you and to work with you. And special thank you to you, Monsieur Beaudry. Merci beaucoup. And thank you to everyone at the Bank of Canada. Your staff has been tremendous. Wonderful to work with, and it truly is appreciated. So thank you, everyone. Have a very, very safe and a happy holiday. And please, let's hope that everything gets a little better in 2021. Thank you, everyone. Merci beaucoup. Bonjour.
you